Hello, everyone. My name is Sofia Cruz. Welcome back to the Midnight Markets podcast. Here we break down trending financial topics with insights from the sharpest minds in the industry. This week, I have a really special guest. His name is Mitchell Zosio.
Hi, guys.
It's so nice to have you here today.
Thank you for having me.
Yeah, could you introduce yourself a little bit more to our audience?
Sure. So I'm a junior in the School of Business at GW, studying marketing and real estate. And I've had various top-tier real estate internships. I have my real estate license in New York. I've sold over $12 million in real estate in the luxury markets in the Hamptons in New York City. So strong background there, focus on development long-term. I just landed an internship for this summer at Naftali Group, which is the hottest premier developer in New York City right now, building landmark properties. So real estate is really my passion.
That's amazing. Naftali Group, congratulations on that.
Thank you. Thank you.
So you mentioned you've worked at the greater New York area, Manhattan, the Hamptons.
Yep.
Do you believe with the current leverages that are starting to surge in the home market, let's say it that way, do you believe that luxury customers tend to have a different negotiation tactic than the other middle income or first time buyers?
Yeah, it's a great question. And it's true because luxury buyers are strategic. They're not really aggressive. And they focus on value, not just discounts. So really, when you're a luxury buyer, you're not as affected by the current market conditions. And that's really because luxury buyers have cash. They usually pay in cash, or they find creative ways to invest in real estate, such as ARMs, adjustable rate mortgages or creative financing. And compared to middle income buyers, they're more impacted by rates due to affordability. And in those markets, there's a lot of new constructions. So you're really negotiating with developers. And that can be a pro and a con. I would say the pro to that is you're getting a new dev, so the best amenities. The con to that is definitely a higher list price, although right now we're in a buyer's market, so there are more able places that you can negotiate better deals. So
yeah, because I was reading through the how homes are going for less than their listed price, and I believe that could be like a big driver on the type of or the amount of demand that the market's having currently, right?
Yeah, definitely. And if you look at the data, like in the Hamptons at least, 47% of Hamptons homes sold below asking in the last quarter of 2024, according to Douglas Elliman. And then New York City luxury listings averaged 6.5% discount to asking in January of this year, and that's from Sirhan. So if you look at that, definitely we're in a position where negotiation is good and negotiation should be utilized. And when it comes to luxury negotiation, I would say it's part data, part psychology. You're buying emotion just as much as the asset. So it's very important to appeal to the seller in ways that relate to being knowledgeable on data points and days on market and things like that.
Yeah, from your perspective, one of the biggest drivers could be lifestyle when people are making a decision, or is it location or value or future value? And especially when you told me that you're always talking with developers and they want like brand new constructions, or
Right.
What is the big key factor there?
The big key factor is location, of course, right, in real estate. And definitely I would say that the buyers now are looking for the best amenities. That's very important. And also in terms, not every luxury buyer is looking for an investment purely, but they also want to have a positive investment outlook in the sense that they're buying in a area that they believe will be secure for their investment long term. Such areas are really any market in most of the Hamptons on the South Fork on the island. And then when it comes to Manhattan, Upper East Side markets, Upper West Side, Tribeca, Chelsea, those are always good places to invest. And I would say when it comes to condos, you definitely get a lot of pied-à-terre buyers in Manhattan. So usually those are like the duplex or triplex units, penthouse units that are being sold, the most expensive ones. And those are international buyers looking to, park an investment in the States. So you see that a lot also.
Yeah, and talking about investors, and always in the real estate field, mortgage rates are supposed to be above 6% all through 2025, and the Fed has started cutting rates.
Right.
how do you see these mortgage rates affecting buyers' behaviors? Like whether we're talking about luxury customers or middle income or first time buyers.
Yeah, I mean it's a great question, and I would go back to saying that luxury buyers really see uh, the rates as part of the process, not just as a cost compared to middle income buyers, because buyers are looking for the overall deal that they're structuring. And again, it's going back to those creative financing strategies, using those adjustable rate mortgages, and they're playing the long game really. So you're looking for the long term opportunity. But I would say when you're going back to the mortgage rates, it's interesting because when you look at inventory movement and rising days on market, these things signal hesitation, right?
Right.
And price cuts in luxury usually lag economic slowdown. So when they show up, it's also a red flag. So it's very important to be a knowledgeable buyer in this market, and paying attention to those indicators. And real estate's like a mirror; it reflects consumer confidence before it shows up in the headlines.
Yeah, and that makes a lot of sense. And I wanted to touch on something more relatable to my generation. In my case, I'm a Gen Z, and there are millennials. But I believe that there is a difference between the buyer behavior for millennials, Gen Z, and older generations like boomers.
Definitely.
What's that difference that you see, whether it's buying or renting or?
Yeah, well, when you're a Gen Z, recent college grad, you're definitely renting. It's unless you have parents or family that's helping you, buy a condo as an investment property in the Manhattan market, you are renting, which means that affordability is definitely a concern. Those new rental buildings might be slightly out of your price range, but you will be able to find good deals in Manhattan once in a while when they show up.
Yeah.
However, it's an expensive market, right? But compared to the boomers, those are the people looking for those long-term strategic investments, potentially in new development in those hot markets, or just a safe investment. And co-ops are big in
Yeah.
New York still. So that's really how it compares. But if I were to give advice to Gen Z or recent college grads, I would say to shop around as much as possible. And also to be careful who you're dealing with when it comes to the brokers. Always have a buyer's agent. If you just trust the seller's agent or whoever's representing the listing, you might get into an apartment or a lease that you're not really happy with, or the conditions are not to your standards. And there's so many agents in New York. So working with like a reputable brokerage firm such as Douglas Elliman or my firm, Nest Seekers, or Corcoran in New York to represent you is incredibly valuable.
Yeah, that's
Yeah.
such a great tip for our audience because a lot of us also, like here in DC, we're trying to go into New York or something related to that area. So it's really great to have your knowledge on it.
Right.
And as you mentioned before, real estate is it's a big influence in the market overall. So
Correct.
what are some key trends or factors that you look at when you're looking where the economy is heading to?
It's a great question. For me, you look for inventory spikes, days on market, increasing when a property is on the market, and price cuts. And rentals and mortgage applications are key leading indicators. So when you look at these different things, it kind of gives you a strong idea of what's happening. And to be safe in these situations, I would say, is to just be knowledgeable and doing your research. Real estate data has never been more accessible. When you go on Zillow or StreetEasy, for instance, in New York, and what's great about that is you can look at those price cuts data and use it as your negotiating strategy to make your package. I also would say when it goes back to buying in New York or renting rather in New York, you have to think about co-ops in terms of presenting a board package, and they have a lot more restrictions. So you're really, when you're graduating, you're almost exclusively going into that rental market.
Yeah.
And I would say that right now there are so many hot developments that are happening, especially in rental also, in areas such as Murray Hill is a popular neighborhood in New York. So to pay attention what's going to appear. and look for a roommate. I think that's like something that I really recommend after graduating. It's expensive. And I think if you can find a great 2-bedroom and you can split it, it's nearly always going to be cheaper than a 1-bedroom.
Best idea for, yeah.
Yeah. And, picking a location that suits you, and also, maybe where other friends are nearby and stuff. I always just recommend that lifestyle wise.
Yeah, that's great insight, really. Yeah, thank you for sharing your knowledge with us this afternoon.
Of course.
We really appreciate it. And for our audience, I have a really, really important announcement. If you want to get our special merch, please go to our link trees in our social media platforms, and there you will find our club merch and also our podcast merch. Make sure you do that before the 1st of April. Please make sure you drop a like, you leave a comment, you share with your friends so more people know about our podcast. And I'll see you next time.
Thank you.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.